Let me introduce you to Pankaj. Pankaj has been my newspaper vendor, and he served our neighborhood for 35 years. Pankaj has been trying to get a loan from a bank to grow his business for so many years, but he's never been able to get that. And the banks have never really supported, despite him being a customer with them for a very long time. Now, why do banks not lend to small merchants like Pankaj? There are three reasons for that. One, that banks find it extremely expensive to acquire these merchants and also service them. Banks also don't have exact business model or a data that they can give loans to these merchants for. And typically, when they've tried traditional products with these merchants in the past, using the traditional models, they failed miserably. That's why we've realized that this is a large business opportunity with 60+ million micro merchants in India and only 4% who have access to capital. This is a $300 billion industry in India, and in emerging markets, it's much, much larger. What we have done at ftcash is we have combined the powers of digital payments and loans. What we have done is it's completely transformed the entire financial inclusion space for these small merchants by giving them an open platform that combines digital payments, which have no upfront fees, no monthly rentals, and open platforms that combines credit cards, debit cards, wallets, and at the same time being able to give working capital loans in the range of $10,000 to $10,000. The interesting thing is that we do a digital KYC and we do a psychometric analysis for these merchants to be able to lend them. These are the three models that we have for digital payments that include a QR code, a POS machine, and a link-based payment system to collect payments from these merchants. On the lending side, we give them a line of credit, and the repayment is done using the payments platform on everyday basis so that they don't have to face the financial pressure of giving month-over-month loans. The dynamic credit assessment allows them to get loans as quickly as 2 days. The average ticket size, like I said, is in $1,000 to $10,000. We charge merchants 18 to 20%, and we have a processing fees of 2%, and we eventually earn about 6.5 to 7% from these merchants. We have done the acquisition, credit assessment, and ongoing risk management, all of them digitized, which has allowed us to create a much, much cost-effective model for merchant acquisition. Since the start, we have grown to more than 30,000 merchants. We have a month-over-month growth of 40%, and we are processing $72 million in yearly transactions. We have an NPA rate of 2.03% for this segment. We have partnered with more than 10 banks and NBFCs in this segment to be able to provide loans, and we have a strategic partner in MasterCard. Our team comprises of Sanjeev, who used to be the Deputy CFO at Deutsche Bank. Deepak used to be a management consultant, and I've worked a lot in the development sector, including the World Bank. Thank you.
That's good. So I have a question. You made an interesting point.
Yes.
You said that it's very expensive for merchants to acquire these clients.
Banks to acquire these.
Yes. So how expensive is it for you? How can you make it then?
So what we do is we have multiple ways of acquisition. So one is we have a feeds and street. We have wholesalers that we have tied up with that actually are able to give us access to all these merchants. We have partnership with corporates as well. And in this entire chain, what we have done is that the acquisition is done through mobile application, which is entirely digitized. So that allows us to have a much better acquisition model, which is at a lower cost than the banks traditionally.
Can I follow up?
Yeah, please.
And how easy it would be for, let's say, a developed bank to take this strategy and implement it and make it their own and use the power of their network to copy it?
So one of the things that we've seen, at least in India right now, is that it's sort of not a priority sector for the banks to be able to lend to them because they've found it extremely risky and price sensitive. At the same time, because it's not in their priority, they've not really worked towards it that level. Secondly, we've also seen that they're more open to doing partnerships with people like us to be able to lend to these merchants because that allows them to scale rather than trying to experiment on their own.
How is your interest rate and fee compared to the others?
So most of the merchants that we work with traditionally have not been in the digital or formal lending sector before. So what happens is they traditionally go to informal lenders who are sort of unsafe also sometimes. So in our case, informal lenders give them rates of somewhere between 50% to sometimes 300% also, which is almost like 1% per day. In our case, that 18 to 20% is actually much, much cheaper for them than the other markets.
How about the formal lender? I mean,
Formal lenders
traditional.
give in the same range, typically about the 18 to 20% range itself, but they're very far and few for these guys.
Do you see yourself as a lender, micro lender, or payment processor?
We see ourselves as a lender who's able to provide payment services so that we have better risk management services. We use payments as a very strong risk management tool and also as an acquisition tool, because if a merchant who does not need a loan right now but maybe needs a payment, so he can start using our payment systems, and over a course of period, whenever he actually needs a loan, based on his transaction history, we're able to provide him a loan as well.
Okay, very good.
Whom do you see as the direct competitors?
So in India, there are a few competitions, people like Neo Growth who have been doing this. But typically what they've done is they've had a much larger ticket size. So for our segments, we have a ticket size of about $1,000 to $10,000. But they have had ticket sizes of which have exceeded at least $30,000 onwards. And that's a minimum ticket size.
Okay, very good.
Anything else?
You have a very impressive list of awards and collaborations.
Thank you so much.
For somebody who works with MasterCard and with PayPal, what are you doing here?
So I think,
how this can award help you?
so one of the things that I was actually discussing with Susan as well was, for us, we've done typically the urban and the peri-urban markets, and we have helped the urban poor with the missing middle class. But we really want to penetrate to the rural markets as well by experimenting this. And I think with the technology that or support that we can probably get from MIT, at the same time also the prize money can help us actually pilot in some of these areas as well to see how this technology can help the rural sector as well. So that's been a priority for us.
Are you making profit now?
Yes, as in per loan we are profitable, but as an overall company we're still not making profits yet. But at a unit economics on each loan, we make about 6.5–7% on each loan.
Okay, very good.
Yes. Thank you.